Welcome in to the Crypto Bunker podcast. Today, I want to talk to you guys a bit about gold and why gold makes sense in the environment that we are potentially heading into. And we've seen gold take off here. So again, hopefully you guys have been following my work. I do believe I've been on point, and I will continue to be on point for you guys, for the viewers. That's why I'm here. So please subscribe if you haven't. I think I have some unique insights that you might not get from other channels. I'm more objective about crypto. I'm sort of open to the idea that crypto might not work out. I'm open to the idea that, you can hold physical metal and crypto at the same time. So a little bit of a unique, process and channel here for me. I'm a little bit into the conspiracy side of things, if you want to call it conspiracy, but all of history is conspiracy. So if you shy away from conspiracy, you shy away from history, because history is just a series of people conspiring to have, do something. So let's talk about this gold rally. First of all, look at this beautiful breakout that we have here on the weekly. Looks really good. Big candle here forming. And as you can see, just based on what this wedge is looking like, targets of about 2250. But let's talk about risk assets. Let's talk about risk assets and home prices. So if you own a home, this is something to think about. If you own risk assets like the NASDAQ or crypto, this is also something to think about. But what we have is we have tech and we have risk assets becoming vulnerable, because right now the Federal Reserve is looking to raise rates, and they're going to follow through with this at this point. If they don't follow through at this point after all of the talk, I think that they would risk the dollar, just becoming non-existent and like hyperinflation. So what they have to do is they have to raise rates, and people have been borrowing at 0% on their homes. Okay, so if you have a home, you can get a credit line where you're able to borrow money from a certain amount of what you've paid down on your mortgage already. And these credit lines are based on the value of your home. So if the value of your home has gone up and up and up, then you can get more money to borrow against to then use to go and buy other assets. You can use it for home projects, things like that. But even that even might be more of an issue for other than people who are using it for risk assets. So if you know someone that might have taken a loan out against their home to buy, risk assets, I think it's time to think about pulling that back and maybe taking the loss, or maybe even have a slight gain still. Because what will happen is when rates go up, you might think like, oh, I have a fixed rate on my home, right? So, the monthly payment for me isn't going to change. But if someone else wants to come in and buy your home, the rate for them is going to be higher than it was, than it is now or in the past. So if someone is coming in to buy a home, again, it's going to be harder for them to buy. So that probably means that the value of your home will go down because it's supply and demand. So if there's less demand because rates are higher for people on their mortgage rate to come in and buy the home, then they're most likely not going to, or they're going to look for a better deal. So what happens to the credit line is that when the value of your home goes down because there's less demand, then people call you up and they say, hey, your credit line was adjusted here. We need, $20,000 from you, within the next month. Like, we got to get that by the end of the month here. Your credit line is is, different now. The rate might be different, or they just need more money because the value of your home went down. So what people have to do then is they have to go and sell other assets to pay down that change in their credit line. And this is a cascading sort of thing. So people will sell risk assets first, like the NASDAQ and crypto. They will sell anything really. They'll do garage sales. They'll sell gold and silver. They'll sell anything they have, right, to get cash. And so the way that, I would say this more relates to risk assets. I would say this relates to more risk assets than anything. People going and selling those things to then pay down that debt. So what I can say is that, I think that people will then go out and basically it's a run for cash. And so I think the dollar still has a chance to do well. And so if you're able to save money, I think that you'll do well in the next couple of years here, because there is a need for physical cash as well. And so I believe that Americans have been spoiled with free money, with all this free money that you can get at 0% or at 1%. And so this is a huge, huge deal. And, I think it's important to have a stable job right now, a salary job that you have. And I think it's important to try to save as much as you can. And, think about what is 50% of all the money that I make and try to save that every month. So take all the money you make and say, I'm going to save half of this money, and then try to do other income streams. So if you're just at your salary job and then you play video games at night and watch Netflix for 4 hours and just do nothing, you're not being productive. In an economy that is going into a potential recession, from what I'm saying, that's what a recession is. That's what happens. These things play in cycles, right? So we're now headed into the other side of the cycle. And so the other side of the cycle, you want to make sure that you're saving money, so that you can deal with these things that are coming. And there is a lot that is coming that I'm not talking about at this moment, but we will get into some of that. So again, we've had fiscal and monetary policy. So fiscal stimulus is from the government. So people that have had kids, they've been getting paid for months now, to just because they have kids. They've been getting paid all the way up until January 31st. That just ended. So that's a huge deal as well. There's going to be less people who have free cash flow from the government to spend. So that's a need that they're used to having that cash. And so where are they going to get that cash? So everyone's kind of going to be running for cash. And it's confusing, again, I've said this, but because inflation is happening. So people are dollars are useless, but inflation happening actually it causes I guess I would say stagflation. So stagflation is when the price of food and stuff goes up and you need more money to buy that. So you need dollars, right? You need more dollars. So it's a demand for dollars. So people sell down risk assets to pay for that. So it's kind of confusing. It's a supply and demand dynamic with both food and then with dollars to buy the food. And I think we are heading into very much heading into more food inflation. I think it will even get more pronounced. And so we'll see what happens here. But in terms of rates, so some people think rates go up, assets go down. So is gold one of those things? Well, gold does well with negative real rates. So negative real rates is when we have the interest rate at say 3% and then inflation at 8%. That's a negative 5% yield on the bonds. So it's all based on the bonds that you can buy. So if you buy a bond that pays you 3% and inflation is 8%, you're losing 5% a year on that trade. So gold does well in that environment because there's no counterparty risk, and it actually usually will outperform things in extreme inflation. It hasn't really performed yet, but that's because I don't really believe we've had too much inflation. We've had asset inflation. We haven't had like real goods inflation in commodities. So I think commodities, it sort of is like, I mean, there has been commodities that have gone up in price, but I do think that a lot of them will continue to go up. I believe that coffee, if you're a coffee drinker, which a lot of you probably are, I would say buy a bunch of coffee, just for some advice there. There is a story from Zero Hedge recently that has shown sort of what's going on with coffee. I can go into this real quick on this. So on this, I'm on Telegram. I follow a few different people on here. Ice Age Farmer, Disclose TV, World War III Info, Silver is Money. These are places that, probably are only for people who are ready to sort of make that next step in their awakenedness. So this person, I guess, there's people who are experts who are saying coffee prices may soar out of control. So this is just one example of a commodity that most Americans use daily. It's not gas, but it's kind of like the same thing, right? You fill up your gas, you get coffee. So it's like, it is a very, very important commodity. And so, I think that a lot of this has to do with, weather changes, fertilizer costing a lot more, people having trouble getting imports and supply chains, supply disruptions, lower exports, like I said, dwindling stockpiles of Arabica beans. So inventory is plunging. This is a big deal. So keep that in mind when you're going to the store. Maybe buy like a couple big bulk things of coffee just to have, just be knowing that the price will increase and that there could be some shortages at some point. So again, I think inflation will be sticky in my opinion. So we have fertilizer prices absolutely exploding for this farming season. So there's farmers who are not even going to be able to plant corn because corn takes more fertilizer. So they're going to actually have to plant soybeans, which is funny because I actually think a lot less people are going to be buying soybean oil and canola oil and seed oils and products that have those in them, because everyone knows that's cancerous and causes metabolic disease at this point. And if you don't know that, look up Carnivore MD on YouTube. He has a lot of good videos on seed oils. And seed oils, if you cut out seed oils, it'll also help you lose weight. And it's pretty like immediate results. So if you stop for like a couple weeks, you'll notice it real quick. So again, I do think that because real rates are negative, that gold will do well in this rates environment, because inflation, I think, will be a little bit sticky. So even if rates are like 3% and inflation goes down to 5%, well, I think that that's still, decent for gold. And I'm not saying gold might go down, but I think it will go down less than other things. So you can, like, less than real estate. Like, I think gold will outperform housing, which is, which I don't know what's the last time that happened, probably in the 70s during the stagflation. But I think if you buy gold and you get out of debt on your house, you will not to use the debt to buy gold, but to get out of debt first, then start to stack some gold, or stack cash. Those are the two things I would say, cash and gold. And then silver is more of like a speculation on crazy things happening, like chaotic stuff, I would say. So for me, I am in silver. I'm a big silver bug, and I'm willing to wait on it as well. I think that it's, a lot of use coming up for environmental reasons, clean energy, things like that. So if you want to bet on clean energy, that we're going to need a lot of silver for that. So, and there will be silver deficits in the next couple of years. Let's talk about oil and gold. So I believe that the oil price rising is showing that all of these printed dollars and people who have gone into risk assets and now have already cashed out the biggest money in the world, right? George Soros and maybe not him directly, but the Saudi Arabia funds, Abu Dhabi, like, these people in Dubai, like all these rich people who have all this cash now. They're like, what do I do with this cash? And I think that they're piling into energy stocks because that's the only place that can handle that amount of volume, because these market caps are bigger. So they can handle, it's what I would say is it's liquid. Okay. So it actually is becoming almost more liquid than the NASDAQ, because the NASDAQ's moving and the volatility is so high that oil is actually a bet on, oil is a bet on, I would say it's a bet on like war possibilities as well. Because I think that there is sort of this tension that's happening, and there's a lot of back and forth. And so we can cover the war stuff a little bit as well, just to give you guys some updates. Like I said, I do follow World War III info, and we can see lately. Let's just go through like a couple of the headlines, and this is just based on, this will if there is war, will be good for oil, good for gold. Risk assets it will not be good for. So it's sort of like the same narrative as what I'm saying with rates. Is this just like becomes the story that they use to be like, oh, this is why the stock market went down. But in reality, it went down because that's what happens in a cycle, in a debt cycle, at the end of a debt cycle. And this is the biggest debt cycle of all time. So it's the biggest bubble we've ever seen. So let's see. It's you can read some of this stuff. There's all different types of breaking news that comes out on this. But there's military buildup both ways. A lot of troops that we're sending over to help out. And there's a lot of tanks and things that are happening. This isn't just like a normal thing from Defense Secretary Austin says Russians increasing troop numbers in the last few days, not decreasing, increasing readiness in the Black Sea. We see buildup of supplies. We see buildup of blood, apparently. So that's kind of scary. U.S. official says it's perhaps the most perilous moment for peace and security since the end of the Cold War. Okay, so let's take that with a grain of salt and see what happens. But I do want to say that, I think that gold will do really well in this sort of chaotic time that we might be going into. And so there's a few different things that I'm thinking about with that. Is war, possibility of a cyber attack, because we know that Russia likes to do cyber attacks, or so that's what we're told. And so there's already been cyber attacks, and I think that was like the first test on Ukraine recently. So there was cyber attacks in Ukraine on their banking system and on their military operations. So people are thinking they either did that for military purposes to have an advantage over Ukraine, or they did it for some other reason. Let's look at this on the daily here. Yeah, it's breakout. That is a nice breakout. And so another thing is, okay, so this is a little bit far. So let's see if I can do this here. There's more data coming out about trials that happened for a few pharmacy companies, and so you'll know what I mean by that. And so if people find out that they were lied to about these trials, and they were and then they see their portfolio and their stocks are 50% down, well, that, and then food prices are high. That's not a good recipe for peace in the U.S., honestly. So it's possibility that the reason that the U.S. we haven't seen riots recently is actually because people's stocks. I know it sounds crazy, but the prices of their homes are high. The prices of their stock portfolio is high. They were like, "Oh, I'm going to retire soon because my stocks are doing so well," and that becomes an issue when they start to find out more things. And so it's really the only thing that's holding up these riots. And I think that with food inflation going even higher, it just could be a chaotic situation where people revert back to cash and physical metal as a safe haven, really, with all this stuff happening. And the other thing is that with the bullion banks, they manipulate the price of gold and silver. They've been doing this for years, and they've gotten away with it because a lot of people rushed into crypto, and honestly, that's not the way to beat the banks at this point. I think it's to buy physical metal, and I actually think we can break the banks. And when banks are failing, I think it's gonna go all sort of along with gold and silver going up, because the banks have massive short positions on silver and gold that they continue to use the 100-to-1 paper derivative to knock the price down. So they'll have like 100 paper ounces of silver that they create out of derivatives, and then they will just sell those paper derivatives into the market, and people will buy the physical, but it won't matter because they have all these paper. But at some point that system will break, and at that point the system, they will let it ride, or they will have to cover their shorts, and that's when it becomes a short covering, sort of like what happened with GameStop, AMC, but almost like at a global level. We've seen bank runs in Canada lately. If you've seen, there's major outages in Canada for their banks within the past 12 hours. So there have been major outages that have happened, and so people are not able to withdraw money. And so I believe that sort of becomes a contagion into other countries and other places where people will look to be withdrawing cash. I know that I've already done it, but if you haven't, maybe have some physical cash on hand, because if something does happen, say like a cyber attack, that's really the only way you're going to be able to buy goods and services with. Obviously, you can have some junk silver, but then you're using your junk silver to buy things. Silver might be $50 an ounce, and you're using like, the Benjamin Franklins that you have that are 50 cents. You're like using like $500 to buy, like $10 worth of something. So I think it's good to have cash for emergency situations, and also just like savings, I guess. But yeah, so there's been bank runs that's starting. Like I said, there's already been cyber attacks. There's been the possibility of war. So yeah, just make sure that you are protecting yourself, and storable foods, generator backup, gas with fuel stabilizer in it, so it can last up to like 2 years. Have maybe portable heater. You can also do solar powered stuff. So a lot of people have solar powered homes, things like that. And yeah, just any like supplements or like medicines that you might need, that you take every day, maybe as like a medication. I'm not a financial advisor. None of this is financial advice or medical advice or any type of advice at all. But what I'm saying is that you might want to talk to your doctor about getting some extra amounts, because if, in the case of a cyber attack, a lot of these hospitals and health systems use they have internet access. They use they use, if that stuff goes down, then there's a possibility and a chance that your stuff, you might not be able to get anything, and people will probably rush to get their SSRIs and things like that people need. So I apologize for that. So people will be rushing to get those things as well. For me, I don't use any like let's say pharmacy stuff, but I do have supplements that I use. So I've been trying to stack as much as I can of that, just because I know if I'm gonna use it, I might as well have it on hand. So yeah, I've just been stacking that as well. So just think about these things. Obviously, there's more people who are better at learning how to prepare than me. There's YouTube channels like Liberty and Finance, who has prep. They're reluctant preppers, I think is their tagline. So they talk about silver, gold. They talk about the markets, but they also talk about like prepping. So they had a guy on recently who talked about his prepping story. So check that out if you haven't. And yeah, hopefully you guys got something out of the video today. These are trying times, but everyone just stay strong and understand that by accepting the truth and by knowing the truth and kind of pushing through these tough times, that's what we need. Okay, we don't need people who are going to go and hide and avoid all of this stuff. And it's not easy. It's not easy. There's anxiety that's along with it. There's fear. There's all these emotions, but we have to push through those emotions and know that we're doing the right thing. So yeah, have a great day and subscribe if you haven't. Liked the video. Appreciate it.